All right, so today we're diving into the HDFC Hybrid Equity Fund.
Okay, yeah.
Probably heard of it. It's gotten a lot of buzz, and for good reason. But we're going to unpack all of that,
Yeah.
see what it's all about, and figure out if it's the right investment for you. Now, I know you've done some research already. You're familiar with HDFC Asset Management Company.
Big players, right.
Huge. We're talking managing a massive amount of money.
5,027,020 crore.
To put that in perspective, that's like the entire GDP of some countries.
There's a lot of trust, yeah.
It really is. So people are clearly confident in HDFC.
Okay.
But this particular fund, the Hybrid Equity Fund, it's got that label aggressive hybrid.
Right.
And that can mean different things to different people.
They can, yeah.
So let's break it down, make sure we're all on the same page. What does aggressive hybrid actually mean in the context of this fund?
Well, hybrid, first of all, means they're not putting all their eggs in one basket. It's a mix of different investment strategies.
A balanced approach.
Exactly. 65% is in equities.
Okay, so the stock market.
That's the idea, yeah. Higher potential returns, but also more risk.
Right, right.
And then the other 35% is in debt.
Things like bonds, more stable.
Right. Less volatile.
So it's about finding that sweet spot, yeah.
Okay, yeah.
Some growth, but also some protection.
Exactly.
The question is, how's it performing? Because that's what we really care about at the end of the day.
Right. Well, recently, it's been doing quite well.
Yeah.
Last year, return of 26.57%.
Wow.
And if you look at the CAGR, that's the compounded annual growth rate.
Right.
For 3 years, 17.42%.
Okay.
5 years, still a respectable 16.89%.
Those are some impressive figures. But I'm sure you'll agree, past performance isn't a guarantee.
Oh, absolutely not.
It's more about understanding how the fund has handled different market situations.
Right, exactly.
Did it just ride a wave, or did it show resilience?
That's the key question.
And that's where we look at things like standard deviation,
Volatility,
Sharpe ratio,
risk-adjusted returns, outperforming the benchmark.
Now, I know those terms can sound a bit jargony.
They can, yeah.
So let's break them down, make them relatable. Imagine a roller coaster, right?
Okay, I like it.
Standard deviation.
Yeah.
That's how bumpy the ride is.
How wild is it going to get?
Exactly. High standard deviation, lots of ups and downs.
Thrill seekers love that.
But some people prefer a smoother ride.
Of course, yeah.
Then you've got the Sharpe ratio. This one's interesting. Think of it as the thrill-to-price ratio.
Okay, I've never heard it like that.
How much excitement are you getting for the price you're paying, essentially?
Makes sense.
And in this case, the HDFC fund, it's got a Sharpe ratio of 1.02.
Okay, so what does that tell us?
Well, it suggests that it's been delivering decent returns relative to the level of risk involved.
So a good balance.
Potentially, yeah. But we still have alpha to consider. And this one's always a bit mysterious.
And it is, yes.
So alpha's like, is our roller coaster beating all the others in the park?
I see, outperforming the competition.
Exactly. It measures the fund's performance against a benchmark, which is basically like a standard measuring stick.
Right, so you can compare apples to apples.
Precisely. And a positive alpha means the fund is exceeding expectations.
That's what we like to see.
Exactly. Now, speaking of exceeding expectations, let's talk about the man behind the curtain. The fund manager, Mr. Prashant Jain.
Yeah, he's a legend.
Over 25 years of experience. That's invaluable, especially in a market like India.
Absolutely.
So what's his style, his investment philosophy?
Well, he's known for value investing.
Okay, and what does that mean in practice?
It means he's not chasing fads. He's looking for those hidden gems.
Undervalued companies with long-term potential.
Exactly. He's playing the long game.
That's reassuring, especially in volatile times. But even with a skilled manager like Mr. Jain, there are always fees to consider.
Right, those pesky fees.
They can eat into your returns if you're not careful.
They can sneak up on you.
So what's the expense ratio for this fund?
It's 1.65%.
Now, that might not sound like a lot, but trust me, over time, even small percentages can make a difference.
It's like that drip, drip, drip in your plumbing.
Exactly. You might not notice it at first, but it adds up.
It does.
So before we get carried away by those impressive returns, we need to factor in those fees, make sure we're getting the full picture.
Absolutely.
Now, I'm really curious about where our money would actually be going if we invested in this fund.
Yeah, let's peek into the portfolio.
What does it look like?
Well, imagine this. Your money gets a front row seat to some of the most dynamic sectors in India.
Okay, I'm intrigued.
We're talking banks, information technology.
The backbone of the economy.
And then you've got pharmaceuticals,
Always in demand.
automobiles, consumer goods.
A real mix.
It's a diversified portfolio, which is generally a good thing.
It spreads the risk, right?
Exactly.
So we're talking about a real slice of the Indian economy. That's good. But when you dig into the specifics, who are the major players here? Which companies are we really talking about in this portfolio?
Well, you'll recognize these names. The top 5 holdings in the HDFC Hybrid Equity Fund are HDFC Bank, Infosys, ICICI Bank.
Familiar names?
Yeah, and then Reliance Industries and Larsen and Toubro.
Okay, so really major players reflecting those key sectors. But what about flexibility for investors? Let's say something comes up and you need access to your money. Any penalties for pulling out early?
That's a great question. It's really important to think about timelines with investments, right?
Right.
Before I answer that directly, have you heard the term exit load before?
I have. But some listeners might not have.
Okay, so basically it's a fee you might have to pay if you withdraw your investment too soon, like within a certain time frame.
It's to encourage people to stay invested, not just jump in and out.
Exactly. So for this fund, there's a 1% exit load if you take your money out within the first year.
Okay.
After that first year, you're good to go, no penalty.
So there's some flexibility if you need it. And speaking of things we all need to be flexible with taxes, how do those work with this fund?
Oh, always got to factor in taxes, right? So with this one, it depends on how long you hold your investment. If you sell within a year, any profits are taxed as short-term capital gains, which is 15%.
Makes sense.
But if you hold on for longer than a year, anything you make over 1 lakh is taxed at just 10%. Big difference.
Patience pays off, literally. You mentioned earlier the fund's AUM, which is almost 50,000 crore.
Yeah.
For those who don't know, what's the significance of that number? Good, bad, or something in between?
So AUM stands for Assets Under Management. Basically, it tells you how much money the fund manages in total.
So a big number like this suggests a lot of investors, a lot of confidence.
Yeah, it often indicates that investors like the fund's strategy and think it will do well.
So a good sign. But like with anything, there's always some risk, right?
Yeah.
What are some things potential investors should be aware of with this fund specifically?
Right. Even a popular fund isn't a sure thing. One thing to remember is each part of the market, each sector has its own risks, you know?
Absolutely.
So like the financial sector, which this fund invests a lot in, things like interest rates changing can affect it, government decisions.
The overall economy, really.
Exactly. And if the economy weakens, financial companies often feel it first.
Right, that makes sense. What about the tech side of things, since we mentioned Infosys as a top holding?
Tech is tricky, right? Things move so fast.
It's exciting, but volatile.
Exactly. Even a company like Infosys, a leader, they have to deal with so much competition, new technology popping up all the time.
So many factors.
Yeah.
It really highlights that diversification is key, right? Like this fund does.
Yeah.
Spreading your money around. But with all this, the risk, the reward, how does someone listening actually know if this fund is right for them?
Yeah, it's not just about understanding the fund itself, but understanding you as an investor. This fund tries to find that balance, some growth, some stability, but it's not for everyone.
Not for the risk averse, you're saying.
Exactly. You got to be okay with some ups and downs, especially in a market like India. It can be a bit of a roller coaster sometimes.
That's a good way to put it. So you need that long-term view, right?
Definitely. Ideally, 3 years or more, thinking about capital appreciation over time.
Playing the long game.
Yeah.
But what about that word aggressive? The aggressive hybrid label. What should we read into that?
That's important. Yeah, it does have some debt for stability, but the majority is still in those equities. And those are always going to be riskier than just bonds, right?
So you need to have a certain tolerance. Be ready for those swings, even with a good manager.
Right. Got to be able to stomach it. And that's different for everyone. Some people are fine with big swings, others not so much.
Exactly. So knowing yourself as an investor is key.
Absolutely. And that's why we do this, trying to give you the information, all the angles.
Empowering investors to make their own decisions.
Exactly. Because one size doesn't fit all. Your goals, your risk comfort, it all factors in.
And never be afraid to get advice if you need it.
Oh, for sure. A financial advisor can be a huge help. Personalize things, look at your specific situation.
Well, I feel like we've covered a lot of ground, from those technical terms to the real-world implications for investors, and all through the lens of this HDFC fund.
It's about connecting those dots, right?
Absolutely. Because at the end of the day, knowledge is power.
Couldn't agree more.
So there you have it, our deep dive into the HDFC Hybrid Equity Fund. Keep learning, keep asking questions, and happy investing, everyone.